Aotearoa, and welcome to Monday's Economy Watch, where we follow the economic events and trends that affect Aotearoa. I'm David Chaston, and this is the international edition from interest.co.nz, and today we lead with news consumer hesitations are showing up in the world's largest economies. But first, our week ahead will be dominated by Wednesday's RBNZ OCR rate review, one that is widely expected by both analysts and financial markets to deliver a 25 basis point cut. That will flow through to floating mortgages and savings rates, but it is far less clear it will affect fixed home loan rates, given that we've had a full range of cuts this last week. In Australia this week, it'll be all about consumer inflation expectations and consumer sentiment. Elsewhere, in the shadow of Northern Hemisphere vacations, Canada and Japan will release updated CPI data, and there'll be a focus on the US Fed, who, with guests, will be huddling in Jackson Hole, Wyoming again. This time, the comments from the two Trump-aligned board members will no doubt hog the limelight. All the while, PMI releases will ground us in the real economy. And in the real economy, Chinese retail sales rose 3.7% in July from a year ago, slowing from a 4.8% expansion in June. Markets were expecting a 4.6% gain in July, so this is a disappointment. This latest result is their weakest growth since December 2024. Meanwhile, China's industrial production expanded by 5.7% in July from a year ago, slowing from June's three-month high of 6.8%. Expectations were for a 5.9% gain, so this miss is small. But it is the softest increase in industrial production since last November. That comes after capacity curbs caused by unusually high temperatures and heavy rainfall in some regions. The more important metric of Chinese electricity production saw it rise 3.1% in July from a year ago, a faster expansion than in June. But hydropower was down 9.8% on the same basis. Coal power was up 4.3% and nuclear power up 8.3%. The smaller renewables sector's rise was much faster than any of these. And China's new home prices in the 70 major reference cities dropped by 2.8% in July from a year ago, easing from a 3.2% decline in the previous month. It was the 25th consecutive month of contraction and the softest pace since March 2024. Only 5 of those 70 cities had any increase, and those were all marginal at best. But then again, so were the dips. For resales, there were no cities showing any year-on-year gains, and only one with a small monthly gain. Overall, it's a picture of a slightly slowing Chinese economy across all sectors, and that will tell Beijing that its stimulus efforts so far are insufficient to keep up with the forces that are dragging it slower. But Beijing is calling the economy steady. And staying in Asia, Malaysia's economy expanded by 4.4% year-on-year in the June quarter, matching the pace of the first quarter, and slightly below an initial estimate of 4.5%. In the US economy, retail sales rose 0.5% in July from June, as expected, and following an upwardly revised 0.9% rise in June. This was largely due to car buying, though. Those are up 3.9% from a year ago, but that gain has been falling from the recent 5.1% peak in March. Although tariff taxes account for most of the gain, overall there is a small real gain here. However, without cars, this would look quite negative. In the New York region, they saw a modest rise in business activity in their factories in July based on rising new orders. And that is supported by national industrial output data. While American industrial production edged down 0.1% in July, missing forecasts of a flat reading and following an upwardly revised 0.4% rise in June, the decline was only because the mining sector was weak. Factory output, which makes up about 78% of the total industrial production, edged up 0.1% in July after increasing 0.3% in June. From year ago levels, it's up 1.4%, similar to most of 2025. Not so positive, though, is American consumer sentiment, and they don't like what they see ahead. The University of Michigan Consumer Sentiment August survey fell sharply from July and well below what was expected. It was the first fall in 4 months, mainly due to growing inflation concerns and sharply worse buying conditions for durable goods. Those surveyed anticipate worsening inflation and unemployment ahead. Overall, this survey is more than 13% worse than year-ago levels. And in Europe, data released over the weekend shows that Ireland's exports to the US dropped by almost a quarter in June compared with a year ago. Tariffs got the blame, but they were able to reorient about half of that drop to the UK. More globally, we should note that international shipping costs are starting to be roiled by the new Trump rule of tariff extras or extra port fees for Chinese-made ships that dock there that comes into effect in about 5 weeks. That will raise freight costs for Americans, with the extra capacity in other trades probably bringing lower freight costs elsewhere. The US Treasury 10-year yield is now at 4.33%, up 1 basis point from Saturday at this time, up 4 basis points for the week. And the price of gold will start today at $3,334 an ounce, unchanged from Saturday, but down $61 for the week. And American oil prices have firmed slightly to just over $63 a barrel, while the international Brent price is just over $66 a barrel now. And the Kiwi dollar is now just over 59.2 US cents and unchanged from Saturday, but it is down 40 basis points from a week ago. Against the Aussie, we've dipped 10 basis points to 91 Australian cents. Against the euro, we're holding at 50.6 euro cents. That all means our trade-weighted index starts today at just on 66.8 and down 10 basis points from Saturday and down a half a cent for the week. And the Bitcoin price starts today at $117,422 and down 0.3% from Saturday, but up 0.5% from a week ago. Volatility over the past 24 hours has been low, at just under plus or minus 1%. You can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston. We'll do this again tomorrow.